This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Patrick, let's move on to the chart deck. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, it means you're not yet registered. Just go to macrovoices.com, click the red button that says looking for the downloads. Patrick, the title page says Santa Claus rally or a lump of coal. What's it going to be?
Well, there's no shortage of people that are still very concerned about these equity markets, but really the first reaction in the post-FOMC period was a technical bounce at a very key level. We did about a 50% retracement toward the moving average, and the buy-on-dip traders bought the dip. And while we are now officially retesting its previous highs, and always the vulnerability technically of a double top, it can always be a risk. But right now, at least up to this moment, throughout this last 2 months, the bulls have really remained structurally in control of the trend of the index. And at this moment, going into this holiday window, I think we have to give the bulls the benefit of the doubt that they may be able to break this out to a higher high. Like you were saying, there are vulnerabilities going into January, which certainly are things that we will have to be observing. But at least for now, technically, we're at a really important moment where the bulls may be able to give this a shot to make a fresh new high.
Page 3, we've got the Russell 2000 Index Futures chart. What's going on here?
It's interesting that really kind of shows the breadth of the market relative to the S&P 500, which continues to be very heavily weighted toward those FANG stocks that have really driven much of the performance. When you look at the kind of what we can label as the middle America stocks represented by small caps, you can really see that the entire 2021 year has been one really big trade range. There was a fake out of a breakout that happened just a month ago and really has now fallen right back into this trade range. So when you look at page 4, I have the percentage of stocks that are trading above their 50-day moving average on that New York Stock Exchange. And again, this was one that we showed last week, but just showing the breadth of the market and really how deep this market correction has been when you're outside of those mega cap stocks that have been holding this market up. And that really, in my mind, is an oversold enough of a condition that could, on the very short term, spur a market rally that could be that Santa Claus rally for the next couple of weeks. Obviously, there are some bigger concerns that you're highlighting, which I in principle agree with. But right now, at least, it's worthwhile seeing whether or not the next few weeks see some new all-time highs.
Patrick, let's move on to page 5, U.S. Equity Group Relative Performance.
Yeah, what I really wanted to highlight, a really interesting thing that, David Rosenberg was talking about it when we had him on the show about this idea that bond proxies will potentially perform well. It was really interesting because in the last few weeks, we've really seen a lot of the cyclicals and consumer cyclicals and all these other spaces, a lot of the everything from financials to the energy names, all relatively doing poorly. And a lot of the best performance have been in everything from utilities to REITs to healthcare. And it's a real interesting trend. Now, when the FOMC meeting came out, what we saw was at least a bit of a relief rally in those cyclicals. And I think one of the things I'm going to be watching into next week is whether or not there was some sort of a shift in this current trend and whether those cyclicals actually have more room to go.
Patrick, let's move on to copper futures on page 6.
Right. And so copper has been more or less in a sideways purgatory for most of the year after a very strong bull run. And what we've seen, at least for the last 6 months, is that this range between 4 to 450 has really contained the majority of the price action. And you can see that by the high volume nodes that are highlighted with that green highlighted box. What is interesting is that copper did try to turn up yesterday, but very similar to your view on gold. Well, one day does not make make a new trend. There's a lot of repair work that copper has to do, but it is interesting to see that it turned up. And just to that same idea that I was talking about with the group sectors, it'll be really interesting to see whether something more meaningful happened or whether this is going to be a nothing burger on the turn up.
Patrick, let's move on to gold futures on page 7.
Right, and you already highlighted this, and I really felt it was just worth visually observing it. We can see that gold market has turned up toward that 1800, and just like you were suggesting, I agree with, is that one day does not make a new trend, and there is a lot more repair work to be done. And I know you're talking about that round number of 1800, which is important, but I also think that that level that we were looking for the breakout when we had Ole Hansen on the show around that 1835, it's actually arguably even a little bit more important. I feel like that was almost like a false start breakout. And even if we have short-term rallies in gold that are failing below that level, then there's nothing meaningful going on in gold. And so I probably will take the rest of the year for gold to do some technical repair work before this chart can really set up for something more bullish. Similarly, on page 8, when we look at silver, silver went for a full-on double bottom retest of its lows from September. And while this was a pretty oversold condition and a very significant little reversal candle that came in on the chart, this is still a very distinct downtrend. And while it would be very easy for silver to make it back to the $23 to $24 level just from a relief rally, it is going to take a lot more work for this chart to establish the base from which a meaningful new bull run can go. But one thing that is interesting is when we go on page 9 to the bullish percentage index of gold miners, over the last 5 years, we have seen that when the bullish percentage index gets so oversold that it gets down to the 20% mark or lower, it has often marked key turning points. What is interesting is the gold miners arguably have been victim of tax loss selling as one of the sectors that have been underperforming. It'll be really interesting to see whether these oversold conditions and reversal candles over the next few weeks establish a lot of key bottoms that may see a turn in the space. By no means am I ready to already be hammering on the table like buy, but often this is how bottoms start to form, and I think that the next few weeks are going to be some pretty critical moments to see whether or not these bull trends really start to come off of the lows and a new bull phase begins.
And folks, if you enjoy Patrick's chart decks, you can get them every single day with a free trial of Big Picture Trading, Patrick's service, which you can find information about on page 11, or just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.